Good morning, traders and investors. Welcome to this Friday, October 22nd edition of Pre-Market Prep with StockOdds. Joel Elconin here, joined by Mr. Rob Friesen on this Friday morning with the S&Ps just sprinting to a new all-time high. Took out the pre-market high of 45.48. That was a target. We went to 51.50 and just a few sellers come in here, 5 points off the high, still up 4.5 handles, 46.50. In order to improve on that all-time closing high, we got to close above 41.75. We're good, comfortably $5 above that as we speak. Crude, that's up 48 cents at 82.99. That's up 49 cents. That hit its all-time high, not all-time high for the move yesterday at 83.96. And the high close for the move has been 83.42. That's just a little bit below where the high in today's session. So we'll keep an eye on the crude oil as well. Gold waking up. We'd like to hear what the odds were on gold. Gold's up $30.30 at 18.12.20. Silver knocking on the door at 25. That's up 65 cents at 24.82. Bitcoin down $985 after its big run at 61,925. Ethereum futures in the red as well by $50 at 4033. So that, and I did that the whole time that I without my screen share. Rob, why did you yell at me?
Well, I'm not even looking at you. I'm doing my own thing over here, right?
Doing your own thing. All right, so a 7-day win streak.
I'm gonna go over something anyway that'll kind of back up what you were saying. So I got
7-day win streak. What are the odds for an 8-day win streak?
Could be just as good as a 9-day win streak. I mean, here's the thing, it's like when you go to the roulette wheel. Just because it comes up black, does it mean it has to flip to a red? I mean, you know what I mean? Like the market's going to do what it wants to do. There are probabilities on streaks for sure, but you know what? Historically, it's more on the downside than it is on the upside.
Really?
Yeah, because it's a buy side market, and so how many analysts do you have that have sell recommendations on everything, right? It's very rare, right? It's either buy more or hodl, right? Or overweight or underweight, but very rarely a sell. Because that's not good for the industry. I mean, the industry makes money because people keep coming in, pouring more money into it, and doing their IPOs, and even things like WeWork come back from the dead. You know what I mean?
Yeah, unbelievable, huh?
So the thing is, it's a buy side market. So if you just did this, test for yourself, you can go to Yahoo Data, and you can just download and sort of analyze it and say, every time that the market gaps down 1%, what is its sort of open to close returns, right? Versus if it gaps up 1%, right? How about, if it goes down successfully a few days in a row, what's the outcome afterwards versus if it goes up a few days in a row. So it's skewed that when it streaks down, the probabilities of an update increase in a compression fashion. When it goes up, you don't have that same exact phenomena that it has to come back down. And I think over all the years that I've been doing this, I think I've seen the biggest struggle from traders when they get stubborn on the short side. Shorts can work really well for you. I'll give you an example. This would be a disclosure of something that I took today. It's a trade that I took, but for educational purposes here, let me share the screen here.
Sure.
So this was Mattel. Mattel had earnings.
Okay.
So let's just look at something here in terms of the earnings. Now, I know I'm not going to be interpretive normally, but for education purposes, so full disclosure, I have this stock short today. But if you're not trading that, if you're not tagging that many symbols and you're looking for opportunity, then this is definitely something to focus on in terms of how, you know, traders do make money from the short side, even in an up market, or how they do take advantage of the news and the elements. So let's read the headlines here. It says, Mattel stock jumps higher or jumps as higher toy prices seen bolstering holiday sales. Okay, so it beat estimates, obviously. So it's, but you just think about that for a minute. Higher prices for the holidays. Does that mean that just because the prices are higher, they're automatically going to benefit, or are they having problems in the supply chain? And so their margins, right? Their margins don't actually increase. And then there's another component. I know a lot of people that aren't going to be buying as many toys for their kids or whatever. You know what I mean? Who cares that, you know, the opportunity is there? Are people actually going to go out and buy more toys? So higher prices might discourage that anyway. So the thing is that people make assumptions. Okay, first of all, a beat. Well, that doesn't tell the whole story. The headline doesn't tell the whole story. Earnings and revenues beat estimates, but that's just a headline. So you have to dig into it a little bit, right? If you want to, and if you have time pre-market, you know, living on the East Coast. I mean, Joel got up this morning. He went for a swim. He went for a jog.
No
He worked out at the gym.
Hit the gym.
You know, he ate breakfast. You know, he had 3 cups of coffee. On the West Coast, it's completely different, right? Like you're just, you know, you got to get up at 4, 3. Some of my traders get up earlier than that, right? It's tough. So when you have time to review things, just remember, it's a little bit of a science and an art form as well to interpret news, but don't get thrown off by headline. And then you take it to the next level, and that is this. There's going to be a commitment of people. If any of the news even means anything or matters, there's going to be a commitment of people pre-market. Okay, there's going to be some volume and some movement, things like that. So prices can get excessive. And let's look at what happened here. We saw some of the pre-market premium here. So this is Mattel. I mean, this isn't you know, this isn't SpaceX, or I mean, this is Intel, right? I mean, Mattel. It's been around for a long time. Blah. It's toys. Okay. So that premium there was quite attractive. And that's why I shorted it, because the odds that I had said to short it, and I just looked at it and I didn't pull it out. Does that make sense?
Right.
Okay, I could have pulled it out, which I do sometimes, but I looked at Mattel, I looked at the premium pre-market. I thought that's attractive. You know, I quickly glanced at the headline, which is the earnings and revenues beat, and also the reason why people are so bullish is because, hey, the prices have been raised. Well, that doesn't mean that the profit margins are actually going to be better going forward. So they've done pretty good. Okay, great. But that doesn't mean that's the story going forward. And not only this, a lot of times stocks can appreciate before earnings on the expectations and maybe leaks of information and stuff like that, right? Like somebody has to type up things. Somebody might be, you know, privy to that information that it might leak out ahead of the public, right? So there could be people that are trading it on it already. So the stock has appreciated in price. And now you have the news. My first trade ever in stock trading, okay? I got to tell you this story because
it's a good one.
It's just hilarious. So this is how I got into trading. Somebody said to me, "Oh man, you should open a brokerage account." There's this. I was doing some. He was doing some door-to-door sales for companies commercially, and he said, "I ran into this company, and it was like Anvil Resources." And he's like, "You got to buy this because this thing's going to go to the moon, right?" So I'm like, oh man, I got to open a brokerage account, right? So this was like 1991, 92, somewhere in there. So, get it all set up, full retail, right? Pay through the nose. Anyway, so that company reported, massive gold reserves that just discovered or whatever, put out the earnings or put out the news release, right? So I bought the stock that day, right? And proceeded to lose half of my investment within a matter of 2 days. And it's like, what? I mean, some of you have had that sort of sticker shock in your lives too, so you know exactly what I'm telling you. And it's like, and it made me so mad. It's like, man, I'm gonna stay with this stock market stuff until I figure out what happened to my money.
Right? You're still figuring it out.
He was promoting the rumor, right? So because he was excited about it, he got me involved, and I bought the news, and it lost half my investment like that. So this is an example of the sell the news, what you see on the screen here. So anyway, I did participate in that. Now the other thing is, like sometimes these gap ups or downs don't always pan out. I wanted to show you where is it here? Yeah, the gap bulletin, which is part of our starter package, and you also get all this stuff if you use the advanced subscription as well for StockOdds. But in the gap bulletin, Intel, it was actually gapping down about 10%, right? The gap from the close to the open is actually 10%. But we only have, because it hasn't happened before, we only have 7%, right? So and there's only been 3 samples in the last 2,000 days of it going down 6 or 7%. But you get a theme here. There's a theme here. Look at from everything from 4% and beyond. It doesn't tend to bounce back open to close. So this is the gap close to open, and this is the open to close. So when you're looking for discount and you're going, hey, this is really attractive. Maybe it's Facebook, maybe it's Snap, maybe it's Intel. I don't care. Though you got to understand that it's different for different stocks. Like if you have a huge dividend paying stock, right? It's got robust earnings. It pays healthy dividends. Every year it seems to raise its dividends, and you get paid for holding it no matter what, if it performs on the capital gain side or not, you still get paid dividend. Think about it. Like if something like that gaps down a lot, you're going to have a lot more investors go, wow, I've been waiting around for a good sale on this. Now I can get my cash income from the dividend put to work. I want to put some money into this, right? And it largely bounces back even the same day, those type of names. But when you have kind of the shocks that have happened to Snap and so on, you're not necessarily going to get that, right? So dial into, here's one thing I've been bringing up to some of the people I've been meeting with. I've had people making appointments with me to see if StockOdds is right for them. Okay, so we spend 15 minutes or 30 minutes or sometimes longer, depending on what their experience is and whether StockOdds is a good fit for them. And I go through everything. So please, I reach out, make an appointment with me if you're interested, because that's the way you can get involved. But here's something I brought out to a few people already, and that's this. When you're using technical analysis, like, could be Bollinger Bands, it could be, parabolic stop and reverse, could be, any type of RSI, any kind of indicator on charts and things like that. The mistake comes in that the brushstroke approach, meaning that you would take the Bollinger Bands and you say every time that any stock or any ETF has this move into the lower Bollinger Band or penetrates it, or moves into the upper Bollinger Band and penetrates it, anytime that occurs, it has a probability of, you know, moving the way that you want it to move after that, or you think it would perform. But here's the thing. I can prove to you through our data that it's stock or ETF specific. Meaning, and I'll run a quick screen here to show you something.
Okay.
Let's see here. I'll use this one here. I mean, I think this is a really, I mean, this is part of dispelling some of the fallacies that you have in trading, right? So let's run a percent B screen here, and we'll do just for open to close, let's say today, right? So that was from the close of yesterday, and we'll put in like 10 events, so at least there's a few, and I'll put a price filter in there and a volume filter just so we don't bring up like crap here. Okay, let's do shares. Okay, so we got it. We're going to run our screen. And now I'm going to sort this by percent B here. Okay.
What is percent B, Rob?
It's proximity to the band. And so if it's negative, that has actually penetrated the lower Bollinger Band.
Okay.
If it's positive above 1, it's penetrated the upper band. So this would be penetration of the lower band, right? But when you look at this, you can see how different the odds are related to, you know, a massive penetration of the band, and yet this is kind of on the fence. IBM, and I mean, you're talking about a big cap stock here. It's on the fence with actually negative performance expected based on that. So even that's a incredible discount, right? Incredible discount, and yet it doesn't show that it's not. I'm not interested in buying that. And here's one where it also has a discount and it has much more favorable odds and average performance. So it changes. Let's flip it to the other side where it's penetrated the upper Bollinger Band, right? How come that events didn't kick in here? I did screen for events. I should see. Oh, there we go. Okay, I'm going to flip it to the upper side here. You could get something still funny going on here. But anyway, so we penetrated the upper Bollinger Band here. Phone's ringing.
How the phone is ringing.
Oh, here's one. Okay, this CNC healthcare provider, it penetrated the upper Bollinger Band, and there's been 6 events, and the expectation is, you know, odds are really low of it performing with average performance that's negative, right? But you might find a situation where let's switch it to, let's see, S&P 1500 here. You know, here's one that's penetrated the upper Bollinger Band as well. Well, this is a good example here. You've got an industrial that penetrated the upper Bollinger Band. And so a trader that's going, oh man, that looks like a great short. Well, he could be rewarded on that one because that does say that the odds are only 30 of minus 0.60 performance just for the day. This is open to close. Where look at this one. 66.7. It's the same penetration of the band. It fell into the same bin of bins. Bins are just a way of putting in
sorting, right?
A bunch of the criteria that falls between this and this. Otherwise, you would have to analyze for just one data point, where this is where you can group the data points, okay, into bins, and then see what the subsequent performance from that bin is. So that's saying that from this bin of 1.15 to 120, which is that penetration of the upper Bollinger Band, there's a very different potential or probable outcome from KNX versus D. D has a probability of continuing up, and KNX has the probability of pulling back. So that's my point. If you're just using a technical indicator for everything that you do, you're missing that subsequent potential or probable outcome. Do you see the problem with this brushstroke approach, Joel?
Yeah. Yep.
It would be no different than if you were using, let's say you're following charts. So a guy's trading a 1 minute chart, another guy's trading a 5 minute chart, another guy's trading a 30-minute chart. They need to have different moving averages for those different time frames. So for the 1 minute, if you want to have some, visibility during the day, a 20 and a 50 period moving average on a 1 minute can be great, right? If you're watching a 5 minute, you might go to, a different time frame altogether, maybe a 1326 type approach, right? So not 50, not 20 and 50. So making sure that your indicators are right for your time frames is part of it. And I'm not talking about curve fitting or anything. I'm just saying that, if you're watching the certain time frame, you want to have the right settings for the time frame. And here, if you're watching percent like Bollinger Bands, or you're watching RSI or whatever, it can be, something could be completely overbought on an RSI level, and yet it continues on. And another stock, whenever it hits that, say 90 to 95 RSI, it pulls back, right? So very different approach. Moving on into a few other things, I just wanted to point out the pre-market again.
Okay.
So we had a big, and you weren't showing your charts earlier, so this is helpful. So this is the up move here where we started pre-market. So early bird gets the worm, and we started pulling back, and we almost, came back down to the afternoon sort of close. We just about tagged it. And so when you're thinking about things, always make sure it's contextual. Like if you go and see, oh, the SPY's flat, because we were just like up a tiny bit, just kind of around flat. And it's like, well, that doesn't seem like, a good premium. Like maybe the market's soft today. Maybe it's, going to go down. You have to think about where it came from. I mean, it's at a discount relative to the highs pre-market. And don't we have this phenomena that the market loves to test the pre-market high or pre-market low or overnight high, overnight low on the Globex futures?
Yep.
Don't you see that repeating? It loves to do that. And on the daily here, like we did, the very first place we rallied to was right back to the pre-market high.
Right. And then we what, this is a little unusual. We took it out today.
We did take it out. Well, I mean, we can't take it out. I'm just talking about, it loves to test it.
Yeah.
I'm not saying it loves to test it and hold. It loves to test it. And that's one of the keys, the anticipatory nature of trading. You have to anticipate, what does the market want to do? And on that subject, on the daily, we're sitting here at our August, September highs, and that anticipation that the market really wanted to go back where it came from. We talked about this yesterday. Well, what does it really want to do in addition to that? It actually wants to go up through it, right? I mean, it really, really does. I'm thinking of that commercial, the Workday commercial. Like, they really, really like him. That one.
Yep.
It's so the market just really, really wants to make new highs. Now, I'm not saying it can't be contested, and I'm not saying that it goes up in a straight line, but the sentiment is that we're going to, well, and the sentiment isn't necessarily going to be wrong in the sense of, if we go to groups here, let's see, portfolio? Futures. Let's go to futures. And we'll go back to look at our lumber. The story of lumber, I think, is a good story to remember. Where's lumber? Can you see it on my chart here? Lumber. Softs. Lumber. Okay. Now you see, that's a good chart to remember. So we may have that situation where all of this yakking about bottlenecks and, you know, no employees and no storage and it goes on and supply chain bottlenecks everywhere. It may work itself through, like we're on this track right now, inflation, anticipating, you know, continued problems, you know, price adjustments, scarcity. We're on that track right now. It may flush out, it may break. We have a story, and you know, I've been involved in some farming and stuff in Africa, Uganda and stuff like that. And it's like we have this story, like when everybody starts growing the same crops. Why does everyone start growing the same crops?
Because there's demand.
Because the prices is high.
Yep.
Now, what happens after all of the farmers in the country start growing the same crop?
You get oversupply.
And then prices drop. And so we may see that flush through. And in that sense, maybe the feds are going to be right that it's transitory inflation and all that. And maybe, you know, the other thing, I'm thinking it's going to persist longer than people expect. Maybe that will be right. I don't know. But that's an interesting story. And we're going to see price breaks like that. And it'll happen in other commodities and other things. And so just remember that, you know, right now,
boom and bust
with the market, we're kind of in this, you know, anticipation that there's also an inflation. People always think that the market has to go down when there's inflation. Well, if you look at other countries that have shifted into hyperinflation in the past, what happened to their stock market?
The market goes up. There's inflation in the market as well.
Right. And the expense goes to this. Right here, we got to watch definitely the US dollar, because that can be the victim of all this, right? You know, the pullback of that. And that's partly the argument for why people are saying cryptocurrency like Bitcoin is a inflation, you know, hedged to the depreciation of the dollar, obviously, right? That's the argument there. Anyway, is that fun stuff for a Friday? Fun stuff. Don't forget about your seasonality almanac. There, you want to go and look at the next 5 days are this last 5 trading days of the month. So we've had a big rally. It's brought us all the way up to where we were before, with the exception of the NASDAQ 100 is still a bit behind the Dow and the S&P as far as that goes. So the NASDAQ 100 would have some room. I mean, it's being challenged by some of these, you know, Facebook things and blah, blah, blah. But anyway, the last 5 days are not super great. The blue here is the SPY. So we could have a pause. We could have a sideways thing. We could have a battle around this area that we're in right now with the, you know, the SPY where it got to. We could have this battle where it just kind of pops up, pops back. You know, you remember when we went through Dow 10,000 and we went back and forth a whole bunch of
1,000. Yep.
Right?
Yep. I mean, the best thing for the market here would be, I mean, it doesn't necessarily have to go up or down. It's just if it could just consolidate here for a couple days, right?
Well,
So
yeah, we love consolidation. I mean, you know, it's actually harder to always adjust for, you know, such big aggressive directional moves. But yeah, it'd be nice to have a bit of consolidation and get some good volatility chopping around. But anyway, that's the almanac, and you can also put in your different ETFs and your different symbols and compare them with the SPY right from this screen. So use that and have yourselves a good weekend.
okay, all right. Pre-market prep with StockOdds here. S&Ps are just dancing around unchanged here. That 45, 41.75. That was your time closing high, and been spending some time just chopping around there. So thanks for joining us today. Hope everyone is having a great trading week. Have a good weekend. We'll be back with you on Monday.